Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, November the 29th. We are 1 or 2 days away from December already. I can't believe it. Let's just get into this. Let's start off with the Dow futures on the daily chart, as usual. And we did have the stock markets in the States where we had a shortened Friday and we had Thanksgiving on Thursday where the market was essentially closed. So this price action, I don't know how reliable this price action is. Normally I would say this is a fairly negative candle on the daily chart where you come up, you make a new high, and then you close right off the, close to the lows and off the high there. So I'm not sure how reliable this is, but normally when I see a candle like that, I'm looking for some sort of short-term pullback into one of these exponential moving averages or into a trend line. It doesn't have to be a deep pullback, but I'm usually looking for a pullback. That being said, with the shortened holiday volume, with the shortened holiday for one, and with the low volume and a lot of people on holidays, I'm not sure how significant that is at this point in time. So I'm cautiously optimistic, I guess you could say. I think the trend is still higher. The macro trend is still higher. You can see here our stochastics are just staying buried in the overbought zone, which is indicative of a fairly strong trend. And you can see, I think, now that we've broken out of these highs, we've been talking about that for several weeks. I think we're really looking at higher prices. We still have targets, up in some of these zones here. In this zone from 16,400 to 16,700 over the next several weeks. So I still am net bullish on this market. That being said, everything is really a little bit overdone. So we're not really getting any deep pullbacks at this point in time. But I think the macro bias is still higher. So there's not really a lot to report this week. So let's jump over to the NASDAQ. The NASDAQ has been very strong, and you can see that the NASDAQ and I believe the Russell seem to be the strongest markets on a chart basis, on a relative basis. So the NASDAQ looks really, really strong. And here's the Russell using the IWM. The chart just looks fantastic. And let's take a look at the S&P. So the S&P looks a little bit more like the Dow. We have some higher targets projected here, up to 1853-ish. Potentially, and you can see our stochastics are really overdone here. Got a bit of divergence in the MACD, but until the market tells us decisively that it's ready to go lower, I think there's no reason to fight this. So one of the things that I've been sort of contemplating this week is, for example, if you want to be a buyer of stocks and the market's breaking, the general indices are breaking to all-time new highs. The question is, should you be looking for pullbacks or should you be looking for stocks that are breaking out of 52-week highs? So I've been running several scans on the market. I always scan for, the pullback opportunities for stocks that are in an uptrend. But I started looking at some of these 52-week high stocks, and the charts just look phenomenal, and I started thinking, well, this is something that I need to investigate a little bit more. I think when we're breaking out to new all-time highs, and I truly believe that we're either in the midst of or we're heading into potentially a new bull market. And in bull markets, the best thing to do typically, in my opinion, is just to buy and hold while that bull run is underway. As long as the underlying technicals and fundamentals stay intact in a bull market, that's usually what you do. There's no point in messing around trying to get in, trying to get out. Now that's so goes the theory, right? When you're in a strong bull market, which I think we're starting, to see evidence of. So that being said, the question is you're buying stocks that are pulling back. For example, while the market's breaking to all new highs, well, by definition, those stocks have to be weaker than the market. So when you start looking at stocks that are at, brand new 52-week highs, along with the market, you're getting instruments that are, better tracking the movement of the market. So this is something I'm going to investigate and talk to some of my trader trader buddies with going into next week and see if we can, come up with some kind of a consensus, some studies, and see what the best thing to do. The best thing to do may be to just go, look at 50% of the stocks that pull back and look at 50% of the stocks that break out in terms of an overall sort of portfolio strategy. So still working through that. It's just an idea I wanted to present to those that are interested enough to watch my videos. That's sort of what I'm thinking at this point in time, because, I'm just, logically trying to think through, if the market's breaking to new highs, why not look at stocks that are breaking to new highs as well? So, you have to look at the underlying market conditions that you're trading, and you have to be adaptable, in my opinion, and that's sort of what I'm looking at. So let's just go through the analysis. Let's look through the major instruments like we usually do. Here's the dollar index. The dollar index is below that key 80.86 level. Momentum starting to bottom out here or get into, oversold territory. We had the MACD crossing over. Really not, that clear on this. I think the only thing that would put me on the bullish side of the dollar index is if we broke above this trend line. So until and if that happens, I'm more neutral than bearish on the dollar index at this point in time. But let's look at the euro. The euro looks more bullish than bearish, but having said that, we're finding resistance at this 61.8% retracement of this high to this low. And you're getting the retracement in here, and we're still finding resistance right at this retracement. So that's not really that telling. It's just I'm kind of neutral on both the dollar index and the euro for that specific reason, that we're not really getting any, breakout of resistance or support areas. So that's, there's really not a lot to talk about there. Let's look at the USD CAD. USD CAD has been on fire. We've been talking about, this wedge pattern for quite a while. We've broken out of this wedge pattern at about $1.05. We're trading as, just above 106. And I believe that we seem to be trending sort of nicely now as we're breaking out here rather. And I think, some of these higher targets are still in play, 107, 108, 109. We've got a zone of potential resistance above us, and looking at, this measured move of this wedge would bring us up to close to 109. So I still like the USD CAD higher. We're just chugging up there, and I like this. Let's take a look at some of the, let's look at the natural gas. So the natural gas has essentially met this target. I was looking at, a retest of some of these higher levels going back a couple weeks ago off of this low. I marked this day on my calendar, or on my chart rather, this calendar day here, the day after where I thought the low was put in. Now we're in overbought territory, but my trending indicator looks like it's going to go net positive. So if you look at this from a macro sort of charting perspective, you've had this major sort of downtrend over the last little while, and we seem to have broken that downtrend, and we're breaking above, this minor trend here. So I think if we can get above these highs, if we can get above, like, let's say 402, then I think a retest of 424 seems to be in order. That's the level that I would logically look at. If we can get above 402, 424, that's another 22 cents of potential upside if that were to happen. So that looks very attractive. And if we look at the fib retracements, that lines up beautifully, like textbook, with this 61.8% retracement of, let me be clear here, of this high, this low. This is where the 61.8% retracement comes in. So, I mean, this looks pretty textbook to me, which is making me a little bit cautious. So I think, when you see such a layup, I mean, this is, I could be wrong here, right? So I think the next major resistance level is 402. And I think if we can get above that, 424 looks great to me. So, and that's where I think we would find the immediate resistance above the resistance level of 402. Of course, you've got intermediate resistance at 408, which is the 50% retracement of that move. So I like that. That looks great. These initial targets have been met, and I think that now that we're putting in different structures here in this chart pattern, I think that those higher levels are possibilities. So let's take a look at the crude oil. So the crude oil, I was talking about in last week's video, I thought we had put in a short-term bottom here in the crude oil right at this level here around $94 a barrel. And then you can see, sure enough, the market just sort of sold off. It's holding the 78.6 retracement, but we basically just, we sort of cratered through that support level. I thought on this day, let me just change the pen here. I thought on this day here when we had this sort of spike up, and I thought this was telling us, okay, the bottom's in place, and we're probably just going to push higher through this trend line. And sure enough, we just kind of fell. Now, we're still holding the 78.6% retracement above 91.41. And then we came up, we did, if you look at a lower time frame chart, just have a look at this bar here, this area, and let me just drill down to a 60-minute chart just to get an idea. Here's the 60-minute chart, and you can see the 60-minute chart broke this downtrend line, intermediate downtrend line, but then it found resistance almost, to the T right at the top of this trend line, and then it sold off. So at this point in time, I think the way that I need to look at this, at least from my perspective, is we've got a low in play here. We broke this trend line here. We put in some lower highs. We're doing this sort of thing. As long as we hold this low and we put in, let's say, a lower high and we break this trend line, that would put me back on the bullish side of the dollar index. I'm sorry, not the dollar index, the crude oil. But if we come back down, and we could retest, but if we actually break this low, which came in around 91.73 or thereabouts, that would really put me on the bearish side of the crude oil, and I'd be looking for some really lower levels there. So I like to use multi-time frame analysis to sort of give me an idea of where the support resistance might be. I think you have to look at things on multiple time frames. It gives you a better indication. So you can see we did come into some of these levels here. If we fail that level, then I think the next level in play would be, let me just tighten this up, around $86.46, $86.50. So I think those are really your decision points. A break below this low or a break back up above here and a break of this trend line, to get you on the bullish side, and a break of this low to put you on the bearish side for a move down to 86.5. We did get some positive momentum here on this break that we were talking about, and then we came down. Now that we've got some conflicting signals here realistically, because the trending indicator is net bearish, and the MACD has sort of turned bullish. So we've got some cross currents here in our technicals, and I think we really need to look at these levels here, these areas here, to see if we're going to break out of this sort of downward. I'm going to call it a downward wedge, even though it's not really, but I think those are your decision points there. Now let's move on to let's look at the 30-year. So I don't need these. The 30-year is a little bit indecisive as well. It's starting to put in some bullish structures, but it's just really sideways here. So I don't really have a lot on that. This break of this trend line here, if we get a push back up above, these highs that we're putting here, I think we could retest these highs. This swing point high in this area. So I don't really have a lot on this. We do have, we've got some cross currents here. You can see we've got sort of a double bottom in here, and we've got sort of a trend line in here. But unless we break this trend line, then I'd be looking for a retest of those lows. I think that's really, sometimes you have to look at the market in terms of decision points, and I think the decision points are a break of this trend line or continuation above that high, to put you on the bullish side, and a break of that trend line to put you on the bearish side. So that's sort of how I'm looking at it. We do have positive momentum, coming into play, so that puts me more, on the bullish side a little bit. But that being said, momentum can turn at any time. It's just based on price action. So I know that's not really clear, so I think you really need to look at those decision points objectively. Let's look at the 10-year. And in essence, basically, you're in a dead zone. There's really nothing to do until and if you get, a break of some of those levels. So same situation here. I think we had a bit of a tighter trend line, but this trend line here, I think if you can get back above that trend line, you've got some positive momentum happening, and you've got sort of this wedge happening here. If you can break up above this trend line, then I think that would put you more on the bullish side for a retest of some of these levels, around this 50% retracement, 61.8, around 126 to 128. And if we break this trend line, I think that would put us intermediate, a retest of these lows. And then if you break those lows, I think the next area of liquidity is going to be, somewhere way down here. So that being said, decision points as well. Now let's take a look at, the yield on the 10-year. We're trading around 2.74, in terms of interest rates. And, this isn't really that telling either. You've got some negative momentum, and you've got, a sort of intermediate positive trend line. I don't really have a lot on this. I mean, you could shoot up to these levels here. You could shoot back down to these lows. It's really hard to, say here. I think if you hold this trend line, then you have the potential to come back up to, 2.978. And so I don't really have a lot on that. I think they're just, these instruments seem to be just sort of dead in the water at this point in time, for lack of a better word. Let's take a look at some of the metals. Let's look at gold. So gold kind of, gold looks like it's bottoming on momentum here, but having said that, we're just kind of going sideways here. We broke these intermediate lows and we've been staying below there, and then now we seem to be catching a bid, but how high could we go? Hard to say. These are some sort of dead instruments as well, in my opinion. There's just not a lot of interest or activity in them. I think if we could get above that trend line there, maybe we could push up into 1266. If we don't and we sell back off, I think, 1191 might be in play, somewhere down around these levels here. So, this doesn't, I'm not even really interested in trading these markets on a day-to-day basis. Silver, same sort of story. You're just kind of dead in the water here. And let's look at the copper. Really not a lot to talk about in copper either. We broke out of this sort of wedge pattern. We're back up, we're back down. I mean, there's really not a lot going on here. Just trying to think if there's any markets that we still need to cover. We could look at a couple of stocks. Let's take a look at some of these high flyers that are back in play. Google is trading $1,060 a share, which is pretty crazy. Let's take a look at Apple. Apple sort of put in this cup pattern. This is off of this double bottom. I've been seeing a lot of these patterns in the market where you've got, these sort of cup patterns here, and I'm usually looking for some kind of double bottom off the bottom. And then you can see here's the handle, and then you get a breakout above the handle, and it's like off to the races. So this is probably, I'm going to guess, because this is going back to December, you're looking at, close to breakout of 52-week highs. And that's usually what you see with a lot of these cup patterns. So and that's what got me thinking about, at the beginning of the video, I started talking about, the breakout of the 52-week highs. This is sort of, the breakout of these 52-week highs is sort of telling me, I'm seeing this in a lot of different chart patterns because I've been scanning a lot of different markets and stocks, mostly stocks. And when you see a lot of these kind of patterns take place, it's really telling you that the market is potentially set to move a lot higher, because these kind of patterns usually resolve themselves in a market that is going to cooperate with the doubling of the base pattern. So what I mean by that is you could almost take a measured move off of, let's say this is the high, this is the low, and when you get a follow through of these patterns, usually what you're looking at is this base to, basically the range or the height of the base to sort of double itself. So, for example, if this was to play out an apple, and I'm not saying it will, but if this was to play out an apple, this sort of cup with handle breakout, you could potentially see this stock go as high as $685, which would bring you almost to a retest of the highs. So, and then when you get that close to the highs, you're basically looking for a retest of the highs. So this is sort of, these kind of patterns. Obviously, I can't cover all of these patterns and all the stocks that I've been scanning for on a daily basis, but I've been seeing a lot of these kind of patterns. Some of them are taking place at the breakout of the 52-week high, with higher patterns. Some of them are taking place where you've got highs, overhead, in terms of overhead resistance. So, but I am seeing, the general theme is I'm seeing a lot of these patterns. And this is sort of telling me that, potentially the markets could go a lot higher, and we could be potentially getting into, a bull market situation in stocks again. So I'm going to leave you with that thought. And, that's something we can talk more about at an upcoming meeting we have on December the 11th. We have the now president of the CSTA going to speak to the CSTA Oakville group as we continue on our trading and investing plan development theme for the season. We're getting closer to the end of this theme, and then we'll be moving on for the rest of the season into some different topics. So hope you can make it. That's going to take place on December the 11th. I'll send out a few notices to the groups that I work with to remind you of this meeting coming up. So good trading, good investing, and I'll look forward to seeing you at the upcoming meeting or at a future video update. All the best.